I thought I'd hit you guys up with another trade recap. I took one trade today on gold, and it was a big fat fucking loss. I don't know what's me and gold are just not vibing right now, bro. You can see this is the loss. You can see my entry. And then also see where I got stopped out. You see my whatever, the little demographic things a bit higher up because of the spreads. But that was my take profit. I had one take profit here, one take profit here. I had 4 take profits on this trade, which is one more than I'd usually do. But to be honest, it was irrelevant because we got stopped out. So I'll talk you through my trade, the buys for today, and we'll just get straight into it. So on the hourly, you can see that we're pretty much just chopping this whole sort of range here. We're just going sideways. So I was looking to try and maybe break out, maybe come and sweep out this low like we did, and then I was going to look for longs because we had look at all these price targets, 4 hour, 1 hour, 1 hour. We had quite a lot of price targets that we could have then hit. So that was kind of my aim for today. Obviously, we see that didn't happen, but that was what I was thinking going at the market. And then I just sat on my hands until we got either a 1 hour or a 4 hour liquidity sweep. That's kind of standard. You guys probably know my strategy by now, so I was waiting for that. Obviously, we got that pretty much straight into market open. We got it at 5 past. And then I genuinely thought that we missed the rally because as you can see there, on the 5 minute, we had pretty big dicks up. We had all them 4 candles to the upside. So I kind of was biding my time. I was waiting for the retrace, and I was like, right, well, I'm ready to fucking enter because it looks like we're going to go long and it looks like we're going to go up. So I wait for my retrace, then I'm definitely going to try. I was eager to hop in this trade, so I was like, right, there's definitely a good setup coming. And there was. I genuinely thought there was going to be a setup and we were going to go up. So I was, retrace ended at half. We had that 5 minute retrace. 5 minute retrace candle closed at 1:30, which is this one here. So I'm like, right, I'm ready to fucking enter. So I draw an equilibrium, obviously these lows to these highs. I'm going to see it sets about here. I've also got this 5 minute order block. Here obviously you can see order blocks, which is something that I'm going to explain in a video tomorrow. So stay tuned for that. An order block here, which we tapped into as well. As you can see, when we got a rejection out of that, when we also inversed this fair value gap. So that was enough confidence for me to enter. Obviously, having an equilibrium order block and an inverse fair value gap, that hits my 3 confluences, as well as being bullish on the break structure. So therefore, I was looking to enter. So I entered on this candle. I put my stops below the fair value gap here, just as cause I thought below the equilibrium was a bit too tight. So I gave myself a bit more room for it to run below the fair value gap. And you can see we got stopped out pretty much straight away. I'm not gonna lie, I was, I was a bit disappointed. I was disappointed, but I risked 2% like I was meant to. So in terms of my rule following, I followed all my rules, so I can't really complain on that front. My confluence side, I genuinely don't think there was anything wrong with this trade. I think I had a viable bias, and obviously my confluence has been hit. So what else am I meant to think? My confluence is hit. And I'm ready to trade, and it looks like it's going to sell for a good trade because we already sweep liquidity. I'm waiting for that 5 minute retrace. We get it, and I think prices went in the wrong direction today, so it's still a positive. It's still a positive day. In hindsight, probably should have been trading on GBP JPY. Gold might not have been the smartest. If I'm trying to think about things I could have done better, gold maybe wasn't the smartest due to the Fed possibly cutting rates, so gold was always going to be a bit edgy, and the price action was always going to be a bit choppy coming up to it because people are unsure about what's going to happen. I think it'll be a 25 basis point cut. It doesn't really affect me that much, but that's just my opinion. I like to stay up to date with everything that's going on. But so maybe gold wasn't the play today, and maybe we learn from that. Maybe on days where the Fed's speaking, obviously. They're speaking at 7, half 7ish. So maybe it's a thing. Maybe I put this in my rules where if there's a Fed meeting, I'm not trading on gold. So I'll probably implement that just to kind of minimise our risk. But if I had to put this loss down to anything, not really anything that I did wrong, but I think it's probably due to that. But we look at other trades. I'll also be trading in 10 minutes on NQ and the S&P. So if I was going to take a trade, I would have done it on the grid bridge part of the yen. So we'll go through that. So you can see here, we had some pretty solid targets. We had quite a lot of foul liquidity line up there, and we come and take that out pretty much straight away. So already I was on that, I was like thinking, but you can see my entrance would have been at 35 and I entered on that on 30, so I didn't really want to be in two trades at once. I chose gold. Hindsight's a wonderful thing, definitely the wrong decision, but we moved from that. And the fact that I know for a fact that I would have caught, if I didn't trade gold, I know I would have caught this trade 100% because it was staring me in the face. So we come up here, we take out this foul liquidity, and then I'm waiting for my retrace. We get dicks down, we get it at half past, candle close at half past, so then I was in, drawing my thing. We have a fair value gap within here, equilibrium as well. We don't really have an order block to play off, we don't really have a breaker block, and there's not a lot of inverse fair value gaps to find, but we do, however, have 3 confluences filled anyway because we've got fair value gap, equilibrium, and then also the breaker structure. You can see we broke structure to the downside here on that candle anyway. So my entrance would have been, obviously I put this on after I knew what happened, but I probably should have traded. My entrance would have been off these 2 rejection candles, off this fair value gap and the equilibrium. I would have put my stop loss at the second wick of the fair value gap here, and then take profits extended down to, I would have had 1 tip profit at this 5-minute low, 1 at this 15-minute, and 1 at this hourly, and that would have been a nice little trade. I'm not gonna lie, it would have been probably the best trade to take. Chose not to, took the one on gold. We'll learn from that, and I think I'd put the loss on gold down to the fact that we just the price. I mean, I'm not really wanting to blame price action, but if price action is going to be shit, then it's going to be shit leading up to the news event, which was tonight, which obviously doesn't affect anything on any other pairs. It won't affect my GBP JPY because it's got nothing to do with it. So I think if I had to put it down on one thing, it would be that. So lesson learned. This is on the paper trade, as you can see. $225 loss, but you know, it is what it is. We live with it and we'll learn. Thank you guys for watching, and also stay tuned tomorrow for I'm going to release some YouTube shorts, and then also probably a breaker block, order block, and fair value gap guide as well, so stay tuned.